Warren Buffett is worth $120 billion. But he admits, without this man, he'd be worth a fraction of that. Charlie Munger, the 99-year-old genius who transformed Buffett from a good investor into the greatest of all time. His secret? He made billions by saying one word: no. Today, you're learning the 20 rules that made Charlie Munger the most influential investor you've never heard of. Charles Thomas Munger was born in 1924 in Omaha, the same city as Warren Buffett. He became a lawyer, built a real estate fortune, then met Buffett in 1959. That meeting changed investing forever. Before Munger, Buffett bought cheap, mediocre companies. Munger taught him, forget what you learned from Graham. Buy wonderful businesses at fair prices, not fair businesses at wonderful prices. This one lesson turned Berkshire Hathaway from a failing textile mill into a $700 billion empire. Munger's personal net worth? $2.6 billion at age 99. But his real wealth? The mental models that made him a billionaire. He read for 80+ years. He studied psychology, physics, biology, history. He built a latticework of mental models that let him see opportunities nobody else could. Today, we're breaking down his 20 rules for thinking clearly and investing wisely. Rule number 1, invert. Always invert. Munger's most famous thinking tool. Instead of asking, how do I succeed? Ask, how do I fail? Then avoid those things. Want to get rich? Don't ask, what stocks should I buy? Ask, what mistakes lose money? Then don't make them. Munger studied business failures more than successes. Why? Because avoiding stupidity is easier than seeking brilliance. Think backward. Most people can't. Rule number 2. Build a latticework of mental models. Munger studied physics, biology, psychology, mathematics, history, philosophy. Why? Because the world doesn't care about academic boundaries. He said, if you have only one model, you'll torture reality to fit it. A hammer sees every problem as a nail. Munger had a Swiss Army knife of mental tools: supply and demand from economics, compound interest from math, incentives from psychology, natural selection from biology. He combined them to see what others couldn't. Rule number 3, never underestimate incentives. Munger said, show me the incentive and I'll show you the outcome. People don't do what you want, they do what you reward. Pay salespeople commissions? They'll sell anything, even if it hurts customers. Pay CEOs in stock options? They'll boost short-term stock price even if it destroys long-term value. Munger avoided businesses with misaligned incentives. Before investing, he asked, what is management incentivized to do? Then he watched them do exactly that. Incentives explain everything. Rule number 4, know your circle of competence. In the 1990s, everyone was buying tech stocks. Buffett and Munger? They bought nothing. They admitted, we don't understand technology. They looked stupid as tech stocks soared. Then the dot-com bubble burst. They were vindicated. Munger said, play games where you have the advantage, not others. He passed on thousands of deals because they were outside his circle. Most investors lose money chasing things they don't understand. Know what you know what you don't know. Stay inside your circle. Rule number 5, read like your life depends on it. Munger read 500+ pages every day for 80 years. He said, I've known no wise people who didn't read all the time. 0. While others watched TV, Munger read biographies, annual reports, scientific journals, history books. He called himself a book with legs walking around. His competitive advantage? He knew more. More history, more psychology, more business failures, more mental models. Reading isn't entertainment for Munger. It's ammunition. Every book is a weapon in your intellectual arsenal. Rule number 6. Wait for fat pitches. Munger said, "The big money is in the waiting." In baseball, you must swing at strikes. In investing, you can watch forever until you get your perfect pitch. Munger made only a handful of major investments in 60 years. See's Candies, Coca-Cola, Apple. Each one was obvious to him when it appeared. He sat and read and waited for years between investments. Most investors swing at everything and strike out. Munger swung rarely and hit home runs. Patience is the investor's greatest weapon. Rule number 7. Say, "I don't know," more than anyone else. Munger's most repeated phrase, "I don't know," "too hard," "outside my circle." Most people can't admit ignorance. Their ego won't allow it. Munger had no ego about knowledge. If he didn't understand something, he immediately admitted it and moved on. This saved him from massive losses. He avoided Enron, crypto, and countless bubbles. Being wrong costs money. Admitting ignorance saves money. Intellectual honesty beats fake expertise. Rule number 8. Study standard stupidities. Munger created a checklist of psychological biases: confirmation bias, availability bias, envy, jealousy, anchoring, social proof. He said, "I learned good judgment by studying bad judgment." Before every investment, he ran through his checklist. Am I being overconfident? Am I following the crowd? Am I anchored to an irrelevant number? Most investors repeat the same mistakes throughout history. Munger studied those mistakes and built guardrails to prevent them. Your enemy isn't the market. It's your own brain. Rule number 9. Quality over price. This was Munger's biggest contribution to Buffett. Early Buffett bought cigar butts, terrible companies so cheap you could take one last puff. Munger said no. In 1972, they bought See's Candies for $25 million, expensive by Buffett's old standards. But See's had pricing power, brand loyalty, and high returns on capital. It generated over $2 billion in cumulative profits. Munger taught Buffett, pay up for quality. It compounds forever. Cheap garbage stays garbage. This shift made Berkshire Hathaway. Rule number 10. Don't trade, sit. Munger called his strategy, sit on your ass investing. Buy quality businesses and hold forever. Why? Every trade triggers taxes and costs. If you buy and hold for 50 years, you compound tax-free. If you trade constantly, you pay 40% in taxes every year. Munger's Berkshire holdings? Some he's held for 40+ years. While day traders pay 40% annual taxes, Munger compounds at 100%. He joked, the ideal portfolio is one stock bought at age 20, sold at age 70, taxed once. Minimize friction, maximize compounding. Rule number 11. Choose partners carefully. Munger and Buffett's partnership lasted 60 years. Why? Mutual respect, complementary skills, and zero ego conflicts. Munger said, Warren is better at some things. I'm better at others. Together, we're smarter than either alone. They could disagree without fighting. They could admit mistakes without defensiveness. Most partnerships fail because of ego, money disputes, or misaligned values. Munger picked one partner, aligned their interests perfectly, and stuck with him for 6 decades. Your partner determines your outcomes. Choose someone rational, honest, and complementary. Rule number 12. Independence over luxury. Munger lived in the same house for over 60 years. He drove normal cars. He avoided flashy spending. Despite billions in net worth, his lifestyle was modest. Why? He said, "I didn't want to get rich. I wanted to get independent." Financial independence means you answer to no one. Luxury spending creates dependency on income. Munger's frugality gave him freedom to make long-term decisions without pressure. He could wait decades for investments because he didn't need the money. Freedom beats luxury. Always. Rule number 13. Rub your nose in mistakes. Munger kept a failure file. Every mistake he made, documented, and studied. He said, "I perform better when I rub my nose in my mistakes." He also studied other people's mistakes obsessively. Why learn the hard way when you can learn from someone else's pain? He read about every major business failure in history: dot-com bubble, Enron, long-term capital management. Most people ignore mistakes to protect their ego. Munger celebrated mistakes as learning opportunities. Study failures more than successes. Rule number 14. Invest in moats, not just earnings. Munger searched for businesses with durable competitive advantages, what Buffett called moats. Brand power, like Coca-Cola. Network effects, like credit cards. High switching costs, like enterprise software. These moats protect businesses from competition for decades. Munger asked, "Can a competitor easily replicate this?" If yes, he passed. If no, he invested. Most investors focus on next quarter's earnings. Munger focused on whether the moat would still exist in 20 years. Moats equal compounding machines. Rule number 15. Simplicity beats complexity. Munger's investment criteria? 5 simple questions. 1. Do I understand it? 2. Does it have a moat? 3. Is management honest? 4. Is the price fair? 5. Can I hold it for 20 years? If any answer is no, he passed. No complex formulas, no sophisticated models, just 5 questions. He said, "Take a simple idea and take it seriously." Wall Street sells complexity to justify fees. Munger proved simplicity wins. The best investments are obvious in hindsight because they were obvious going in, if you thought simply. Rule number 16. Never use leverage. Munger was terrified of debt. He said, "Smart people go broke 3 ways: liquor, ladies, and leverage." Berkshire Hathaway operates with 0 debt. Why? Because leverage turns small mistakes into disasters. In 2008, brilliant investors with 3-to-1 leverage went bankrupt. Berkshire, with 0 leverage, bought bargains and thrived. Munger knew, leverage feels like genius in bull markets and suicide in bear markets. Patient compounding beats leveraged returns always. If you can't get rich slow, you won't get rich fast either. Rule number 17. Think in probabilities, not certainties. Munger never said, "This will happen." He said, "The odds favor this outcome." He thought in probability distributions. What's the range of outcomes? What's most likely? What's the upside if I'm right? What's the downside if I'm wrong? He only invested when odds were heavily in his favor, asymmetric bets where losing costs little but winning pays huge. Most people think in black and white. Munger thought in probabilities. This mental model prevented overconfidence and catastrophic losses. Rule number 18. Never stop learning. At age 99, Munger was still reading 500 pages per day. Still attending board meetings. Still learning new mental models. He said, "Go to bed smarter than when you woke up." He studied artificial intelligence in his 90s. He learned about new industries until his death. Most people stop learning at 30 and coast on old knowledge. Munger learned for 80-plus years. That's why his advice stayed relevant across decades. The day you stop learning is the day you start dying. Munger proved you can learn until your last breath. Here's the tragedy of Charlie Munger. He lived 99 years of brutal honesty in a world that rewards lies. He told investors they were stupid when they chased memes. He called Bitcoin rat poison. He said most active trading was bonkers, and people hated him for it. They wanted get-rich-quick schemes. He gave them get-rich-slow wisdom. They wanted hot tips. He said, read for 80 years. His greatest tragedy? Losing his son to leukemia in 1955. He experienced devastating personal loss while building his fortune. Money doesn't shield you from pain. And here's the deeper tragedy. Munger knew things most people would never understand. He saw market bubbles before they burst. He understood human psychology so deeply, it isolated him. Wisdom is lonely. The smarter you get, the fewer people understand you. Munger died in November 2023, still working, still reading, still learning, until the very end. So what do we learn from Charlie Munger? That thinking clearly is more valuable than working hard. That reading 500 pages a day beats trading 500 times a day. That saying no creates more wealth than saying yes. Munger proved that wisdom compounds just like money, but it takes 80 years of reading, thinking, and learning. He wasn't the richest man who ever lived, but he might be the wisest investor. His legacy isn't his $2.6 billion net worth. It's the mental models he gave us. Invert problems. Build multiple perspectives. Avoid standard stupidities. Wait for fat pitches. The lesson isn't be like Munger. The lesson is think like Munger. Read more. Think better. Decide less. And remember, the big money is in the waiting. 20 rules from the man who made Buffett a genius. Which mental model hit you hardest? Comment below. I want to know which one you're applying. If you want to learn from more legendary minds, subscribe now. Because next week, we're breaking down John D. Rockefeller's 20 rules for building the richest empire in history. And if this video changed how you think about investing, hit that like button. It helps us reach people who need this wisdom. Remember, invert your problems, read 500 pages daily, and the big money is in the waiting. Now, go think clearly.